Well, welcome to a new trading video. In this video, we'll cover what I consider the single best crypto trading strategy that you can employ in your own trading. I've been using this strategy since the beginning of my crypto trading for years, and it's something that works in either a bull or bear market because there's really a couple strict rules that you would follow with this strategy. Now, in this video, what I'm going to do is I'm going to outline the strategy at a high level, and I will not be going into a lot of details. Main reason for that is because all of the details about how you trade around this strategy is covered in my training. So if you want to know really how to take advantage of the strategy, I'll share the overview of it, and it'll be pretty obvious once you kind of see it broken down here. But I'm going to be talking about measured moves, moving averages. We're going to talk about impulse moves. We're going to talk about value channels. And I'm not going to go into detail on all those because I've covered some of that on my YouTube channel, but I've covered it in detail in my training, where you can go in there and learn how to apply these methods yourself. That's one thing I will mention is that in my training, we're currently revamping it a little bit, making it look a little bit better. In my training, we do have a full training outline that we're going to release here this week that will go into detail of everything that's in every module. Where this type of training would fit would be within the trade system. This is where I break down individual trade systems. You can see here we have a daily time frame trade system. This would be an addition to that, so I'm going to go into detail of the weekly time frame trade system. We also have a weekly open, high, low, and close trade system that works really well. So this breaks down trading with the weekly open, high, low, and close indicator. Now, if you're interested in joining the training, it's been one cost from the beginning, and it will remain that. It's 0.07 BTC. This includes not only the training and all the updates that I do on a weekly basis. I just added the Forex market, so I'm going to be finishing off the Forex training. I have a full scalping section, so if you're interested in scalping, I go step by step on how to create a highly effective scalping strategy. And then as a member, you also get access to unique indicators. Some of the indicators you actually see here on this chart right now. So the STSI is a really good indicator. You can see this is a great bias indicator. It's the bottom one right here. And you can see here, it's giving signals to go long. All four of the signals fired here on that day. That means you would have gone long the next day. That would have been a pretty decent trade here on ETHBTC. So with all that said, if you're interested in getting involved in the training, you'll find a link down below to my website, or the best thing is join Discord and send me a direct message and I can share how to get started. It's easy and I look forward to having you on board. So let's jump in and let's talk about this trading plan or this trade idea. If you've been following me any amount of time, you know I'm using the phrase trade idea a lot more, mainly because it's a good representation of how you should look at your overall trade. It's just not about entries. It's just not about exits. It's just not about management. Everything is included into one trade idea. So this trade idea starts with the weekly time frame. So we're looking at the weekly time frame. We're looking at Ethereum BTC. And I have a couple indicators that I'll talk about here. I have the indicator that I've created called the dynamic price channels. So that's the channels that you see here. It's an indicator that I built based on the value channel analysis that I do, and I use it across all markets. We have the weekly open, high, low, and close, and the daily open, high, low, and close. Those are really important liquidity points that you want to be looking at in your chart. In addition to that, I have way more moving averages than I suggest anybody have. I have the 200 all the way down to the 5. Now for this trading style, what you're really going to be looking for is you're going to want a slow moving average, which would be probably the 200 or the 99. A medium moving average, which is the 24. The 24 works very well here, and that's the white one that you see here. And then the 9 and the 5. And the reason why you have the 9 and the 5 is because, remember, this is on a weekly basis. So the 9 and the 5 are your fast moving averages, and the 5 is going to give you a good indicator whether or not it'll bring you to reality of what you're seeing in price is really the way to look at it. So let's jump over the first thing you would do on this. The first thing that you do on a chart when you're trading off this is that on every individual chart has its own personality, even if it is tied in the crypto market and they trade somewhat the same, but it has its own personality and own relationship to BTC. Because of that, what you want to do is you want to understand how does it impulse and how are the measured moves. What does the typical measured move look like? And you want to know what that number is. So when you know what the number is for the individual thing that you're looking at, you know that the typical measured move, then you know whether or not you know the norm of a measured move, which is the key. The next thing you want to know is when it impulses, how much does it impulse? And then match that to a measured move. Once again, I said that I'm not going to go into detail. I have videos on my YouTube channel that explain this stuff. If you're in my training, this is going to be second nature for you. But let's look at a trade here. Remember, we're looking at the weekly time frame. I also have a 2-chart setup for this. So if I click tab, we're going to go over to the daily time frame. So here we'll be looking at the daily time frame with whatever we draw on the chart. So because what you're going to do is you're going to start with the weekly time frame for your analysis, and then you're going to look at the daily and the 4-hour for your entries, because that's where you're going to see price action that is going to reveal to you whether or not there is stopping volume, whether or not the price action matches what you would expect to see for that impulse move to start, and whether or not that stopping volume is aligning with where you want to see it within the value channel analysis. So let's jump in. We're going to go chart by chart here, or a couple charts here, just to discuss the idea and to break it down a little bit more. Now, I've already done the analysis on the measured moves. I already have a good feeling for what those measured moves look like. I already obviously understand impulses and how to look at doing entries for impulses and stopping volume and everything else. So what we're going to do here, though, is we're looking at EECBTC on the weekly time frame. And what you're going to do is you're going to look for pullbacks. And you're going to look for a measured move pullbacks. You're going to have a good idea what that typical measured move is. And keep in mind when you're doing this, and I'm going to go back in time on this chart here. But when I do this, I can't change time frame or anything. It becomes a little bit of a pain to use. But what I'm going to do is I'm going to go back in time here. So here, at this point in time, you don't know what's going to happen. You might be thinking that it's going to hit this bottom, it's going to find support. Although if you look at the true measured move of what this chart typically has, you would say that that's not the highest likely or high probability point of return based on the average measured move of this asset, of this instrument, I should say. So what you would do, though, is I'm going to use the GAN tool, and I'm going to just create a simple value channel. And for this, there's 2 ways to do this. The one is the least aggressive way, and then the other one is the more aggressive way. I do it both ways, but that's to use the actual, so this is the open of this candle here, which is a down candle. So we're going to start at that open of that candle because this is the start of the sustained move. And then we're going to use the close of the last candle. Now it becomes really tight here because we're not really expecting an opportunity here. Given our analysis, given the analysis that we've already done, we're not expecting a actual move up, because obviously the one thing I would look at too is, and I'm pulling up indicators, the bottom indicator is the custom indicator available to members called the Super TSI. Use it across all markets. It's painting bearish right now. So it's painting bearish. At this point in time, it's bearish. So I shouldn't be looking for any long entries, because it's in a bearish bias. If I'm shorting, then I should be shorting this market because it's turned bear. So this is a good opportunity to short. So if we remove those, so now we're just kind of playing a waiting game. But what we're going to do here is we're going to take the middle of the bottom of the value channel, because this is the most important liquidity area that you want to be watching going forward as you're watching the measured moves unfold on the weekly time frame. So let's speed this down a little bit, and then let's go to the next week. Next week, we've got the close of the next week. Now, as we thought, it's still not to this. We might be expecting maybe a reaction at this range, because those are 2 strong wicks, you could say. And then at least this wick created an impulse up. So right now we have nothing. So we're going to go to the close. We're going to move our middle here. Now, a couple things to note. This is just a side note. You notice that the actual middle aligns really well with this rejection point. So that's going to become important later. It's something you probably want to look at and remember in your trading. We've got the close here, and nothing tells us to enter yet. If we pull up our STSI, we see that we're getting signal 3 here. So signal 3 is fired, signal 2 and signal 1 fired back here. So 1 fired here, 2 fired here, and 3 fired here. So we got early warnings to go short, or that the strength was dissipating in this early from 1, 2, and 3. The next signal we would expect here in the next 2 days is probably signal 4. So let's move on to the next day. Okay, and there it is. So you'll see here on the STSI, the close of this day fired signal 4. We are in a true bear bias. Now, one thing about the crypto market is that the biases can change quick. But you also want to know that you're in the gravity of the market is bearish. That's the thing to keep in mind. But what do we do at the end of the close? Well, we update the actual value channel, this mini value channel, go to the center. Now I'm explaining this one slowly because as we move into charts, I'm going to be just jumping through it and I'm not going to explain the stuff like this. So I'm just explaining this one slowly so you understand the concept. So let's go to the next week, sorry. Next week closed, still moving our channel down, and it broke. See, simple traders would look at this here because support and resistance really doesn't exist. That's the one thing I'm going to start unequivocally saying. It does exist, but the way that it's taught in the wrong way. And I've been trading long enough now that I can start unequivocally saying, and I have a big enough edge across multiple markets that I can unequivocally start saying some things that I think annoy the hell out of me. One of those is a support and resistance. I do teach it in my course, but it is a good concept to know. You do need to know it, and it does work. It doesn't provide you with enough edge. Because this is a prime example. This would have been a key support and resistance area, and it blew right past it. It blew past this support. On a lower time frame, these two wicks here would show some good support and resistance. And even maybe if you use another method like Quick Finger Luke, where he's talking about base breaks, this would have been a good base break area on the 1 hour time frame. But if you would have been trading this, you would have been wrecked. It just would have been the worst possible place to enter. Now, maybe down here, if you are following some of his methods where you enter here and then you enter larger as it goes down, yeah, you're dollar cost averaging in. But that method, the concept of support and resistance that's based around, is the wrong way for you to start looking at markets. Is the wrong way for you to look at markets, I should say. I just wanted to bring that up. So we moved our value channel here, and then now we've got the center. The center's moved here, and now we're in full bear bias. So let's move on to the next week. Okay, we have our first sign here. Our first sign here that this is probably maybe an opportunity for an entry. And why is that? Well, we're not going to jump to a lower time frame yet, but you would be jumping to a lower time frame. First thing is that the market is signaling, and the one signal that you see here is that this extension impulse up on the week, impulsed up to the 50% mark of what we've been using as our mini value channel. That's a good sign. That's usually a signal that the market wants to get there, but then liquidity ran out on the buy side. The sell side liquidity stepped up. The sellers stepped up and basically were to push it down, mainly because of uncertainty and profit taking, and probably people that entered on base breaks here. So maybe they did enter in base breaks, and then they're looking to make, what would they be making, right? They'd be making right around 5%. Just getting all their positions either at break even, or they're getting all their positions at a little bit of a profit. But it was heavily rejected. And that was probably heavily rejected for all the people that entered around this area using standard support and resistance that doesn't work. So as we go to the next day, though, what we're looking at here is this broke and closed above our 50% mark of our bottom value channel that we've used here. Now, I actually should adjust this a little bit. Instead of using the bottom wicks, use the close, because that's what we've been using. So then, and it closed. Notice as we use the close up here, or the open up here and the close here, it closed 50%. So it didn't quite break and close above 50% of this bottom value channel, which isn't quite a signal yet. Closes, hold more relevance than anything else. So a close is something that if you're going to use in trading, what should you use for a conviction or for something to confirm your idea? It should be a close. So it didn't close above it, but we're watching it and you would be looking at it at a lower time frame now. Now I'm not going to change that yet, because if I do that, since I'm in the rewind mode, it will lose the place that we're at in time. But let me write down this day, which is 6 May 19. So we go back to it here in a second. Okay, so let's move on a week. And, you know, for some reason it stopped in the middle of that week. I think that week was, I don't know why I did that. So we see here we went on 2 more weeks. These 2 more weeks, we had a sell-off, and it's going, look like it's going to double bottom here. This is where you might expect a reaction here in a double bottom. But what do? Keep in mind this is real time. You're updating this, or it's past, but this is how you'd be doing it in real time. Updating your value channel. Let's move on to the next weeks. And look at that move. That's some pretty serious move there. Let's see where it closes. All right. So you might have missed that move unless you were watching this closely. And I'll share. So that was on the 13th of May week. This is why I'm not giving you the full picture, because what you're doing, if we go back to this week on 6 May, which we'll do, is let's go to the daily time frame. So the daily, we're looking at the daily time frame now, and this is 6 May, the 6 May week, which is right here. And this is, so the end of that week, and how you would see this in what you're looking at here, is that, and I know it's hard with my charts with everything on here. It's probably hard to visualize it. So I'll remove my dynamic price channels. I'll remove all the EMAs. I'm sure there's a way to say show. This line here is BTC. And then I will remove the daily open, high, low, and close. And then the weekly. So this is the weekly, what you see loading here. So this is the start of the week here. And this is May 6th. You see May 6th had a run, and then it had a pullback. And then and then the pullback ended here, and that would be the bottom of our value channel. Where's the center of our value channel? Right here. See, this is why you don't enter on the weekly. You go down to your lower time frames, because this is a clear sign that you should have entered the trade. When it closed above, it did a couple things here. Here's the following week. So this week it had a retracement back down. And then what is it doing here? Is it's closing above this black line here, which should be white because I'm on these charts, but I haven't not updated this chart for the actual dark charts. This white line here means that it's above the weekly open. So price crossed above the weekly open. Not only that, it crossed above the actual 50% of your value channel area here. So that's this blue line right here. Crossed above that, that's a signal to take a trade. Take a probe position. You take a probe position, and especially if we go to the 4-hour time frame and we look at that same area in the chart. So this is this area right here is really a kind of a prime, the higher, the lows are being protected. And then when you see it move, and as it moves through the actual value channel, you take your probe position or you take your full position, depending on how you devised your trading, and you enter here. And then you enter until the structure breaks down or until it fits the measured move that you're looking for, which if you would have entered there, it would have been a 25% move. And that's on the 4-hour. So we're looking at the 4-hour time frame. And why does this move look good? Well, the volume profile looks good. Volumes matching price action and everything else. And then, but you still wouldn't have a sign yet to kind of get out yet. There's still no clear sign. Let's say you entered this trade and you're still in this trade. Well, the first thing is when you're up in the crypto market, 30% take some profit. General rule. In all trading, I've learned the best way, and this helps psychologically as well, take profits along the way. You never go broke taking profits along the way. So I might take a little bit of profit when there's like a little bit of a stall here at 15%. And and then there's a stall here right around 30. Well, I'm going to take profit at 30%, and then I'll leave some in. And I hate the rule of moving your stop loss to break even. I think that if you do that, it makes you feel good, but more times than not, there's a reason where you should probably move your stop loss up to here in profit. I've done that more and more now as I've traded. I no longer move my stop loss to break even. I move it into profit, mainly because I'm watching the market so closely that if it does go back to my stop loss, I would have probably already got out of it anyways, just because I could recognize that. The other thing is I don't like that rule. If you're in profit here, and I understand the logic. I've seen both sides of the argument on it. I've just found that I will move my stop loss here to in profit. Because if it breaks there, I've got more profit. I don't have as much as if I would have took it up here, but I'm still giving it room to kind of do whatever it wants to do. All right. That's the last tangent in this video. So do you get the concept? Let me go back. Start on the weekly time frame. As the trade unfolds, you draw your value channels. Now you can also draw them on the actual wicks. And if you do that, the same applies, meaning here, if you use the wicks, meaning the high and lows, so here's the high, you have to make sure that it holds up. Here's the low, because this had been the low that you would have here, because this week didn't open yet. Remember, we're trading off the retracement. The same thing applies. Generally, you're going to get in at a better price. Generally, because what you're going to see as we go down to the lower time frame now with that type of charting, you're going to see that you got in kind of a little bit earlier on that move. You got in right when it broke kind of this structure here. Which one do you use? It's up to you. Sometimes I do both. Pick one, do both. It just needs to align correctly. And what I mean by that is if you've gone through my value channels training, you know what it means to align correctly. Make sure it aligns correctly. Otherwise, you're going to be taking trades too early and you're going to be taking too much of a risk. So let's move on. Let's move on to a couple more charts. Now I'm just going to go through this quickly because you get the concept now. You know what we're doing. So let's look at DGD. Measured move. Let me just look at it. Measured move looks like it's a little short yet. It probably has a little bit more to go. So what would I be looking for? Well, first up, I'm going to draw my value channel here and here. It's already punctured 50% of this mark here, but it got rejected. See that? It punctured it this week, current week that we're on, it got rejected. So that would lead me to believe that I probably would want to project down like something like this. And I might even do something like this. That's probably a little bit too aggressive. So something like this is probably what I would project down. And then I would be projecting down to here. That's what I'd be looking for. That's just me projecting ahead. Right now, there's nothing to trade here. There's no reason to even trade here. One thing I will say, if you use the same chart setup like I am, you can click save. And as you go back to these charts, the lines that you're drawing are still there. So you only have to draw these once, especially if you use like a watch list like I have over to the right. Actually, if you want this watch list, this is a Binance watch list, join the Discord group and ask me to get the watch list. I'll send it over. It's a text file. You can import it into TradingView. So let's do this one. This one here, we might have missed the trade, but there's still an opportunity for maybe a pullback. This is LTC, BTC. Now, obviously on these ones, you're going to see the movements like this. So you'll see here, we missed the optimum trade, which is here. Well, where's the next optimum trade? The next optimum trade is still here, and it's here. Those are the next optimum entries. So if you see a pullback, which you want to see here on this type of, because this measured move looks good. I just looking at it, it looks good. So really what you'd be watching for on this type of strategy right now is that it already broke the 25%. So you could, there's three opportunities on way this chart is aligning right now. There's an opportunity to enter right now, and you would enter right now with close trade management, looking at whether or not this 25% is going to hold. The second that it doesn't hold, you probably should get out of the trade. The next thing is that if this does move up, so if this moves to the upward, if it moves up, I'm stumbling over my words, then this is your target 1. And then you want to see a close above target 1 for you to stay in this trade, with the eventual target being here and here at the 75%. Your final target on this would be somewhere around here, which aligns very well with the dynamic price channel you'll see here. This aligns very well with the dynamic price channel was here. That'd be your final target. You might want to keep some in to see if it's going to go beyond this double top, but that'd be your final target. The other option is that you wait for a pullback, and then this is your first point of pullback entry. This is your second point of pullback entry. Both of these levels have to hold. A less aggressive way of doing that, if you want to cut the middle, is in the middle here. If it does look like it's going to pull back, and that happens to be the middle of a value range. So it's another good strategy. You'd use that. Once again, those in the training should really understand all this at a T. Let's move on to the next chart. So this one here might still be an opportunity. So if we look at this is EECBTC. And what I did is I think I sorted these by, I don't know how these are sorted. I don't know how it's I mean, you can sort it by symbol and then by change, but for some reason I don't know how it's sorted. But so here we saw that we missed the trade. Obviously, I'm in some of these trades already, so I am in some of these. But it's not looking good. It's looking like it might pull back. It's not holding the 25%, but you would already had your target. Because where's your first target on a lot of these things? Well, when you're entering here, at the middle of a channel here, on the weekly time frame, remember you're entering on the daily and the 4 hours, so you're looking at those lower time frames for good entry criteria and reading price action. Your first target is the 25% mark. Your next target is the next 50% mark of this here. And this is saying that the measured moves and the impulse moves. So you know what the upside impulse moves are. You know what the upside measure moves are. So you already know this. And I bet they align with the 50%. So my first target, if I were to look at this, if I entered here, would be here, which is 8%. And then the middle one here, which is 13%. And then here is 23%. And then this is the support and resistance target at 75%. See how that's aligning pretty close with previous support becomes resistance? Well, 37%. So really you could look at this as 5 take profit points. Take profit 1, take profit 2, take profit 3, take profit 4. It's really the way to look at it. So let's go to BTG. Actually, let's not. Let's go to KMD. Let's look at KMD. All right, KMD did a similar type of thing. Now, my point here is not to show you, or not to say that we have opportunity for trades now. My point in this is to show you the trade system, the single best trade system in crypto, which it's showing right here. It's a good trade system because look at this. Look at what I just explained. We took the open of this day, which is the first part of the impulse move. We measured out the impulse move to the bottom when it finally bottomed. We saw the market telling us that it wants to reverse direction, but got rejected by people not sure, but that it crossed the 50% mark. And then on a lower time frame, we saw, you can see, I'm not going to go to the lower time frame, but I can just see with this weekly that the lower time frame gave us confirmation to enter here at this day right here. And if we look at that and say, okay, well, we enter there, let's use the long tool. You entered here. First point of target is 12%. Next target range is the middle of this range, which it already crossed, so you would have already had profit, 24%. Your next target area is, and then why is it not showing it? Is 34%. And then your final target area on this is probably the middle here, right where this value channel aligns, which is 70%. So if you want to hold out for that. Real simple, easy place to put your targets. All the first 3 have been met right now. So you're basically 75% out of that position in some pretty good profit. And you've got some still in. And like I said before, you're not putting it at break even. You're putting it somewhere where it makes sense. So let's say that you're here. You're still in profit, let's say 13%. So you put a trailing stop loss or a stop loss at 13%. Give it room to grow or give it room to retrace. Doesn't matter. You've already made some good profit already. Now is the time to just kind of sit on it and be patient. NEO. All right, this one's having an interesting pullback. So you might have another opportunity here to enter NEO. So if we take this, and this is not exactly using this, so let's use this. Start of the impulse move right here. Take the middle. So NEO might actually be a trade to look at right now, because it did move. Now, this is, keep in mind, remember I said every chart has its own personality. NEO has its own personality. NEO, you'll see here, look how it moves, just at a glance. It's been very skittish as of late, as most things have. But when it does move up, it doesn't move up. There's only a few times on the chart that you can see here on the weekly that it's had sustained weekly movements. Most movements are 1 or 2 weeks. 1 or 2 weeks. So while it's at a bottom, you have to realize that there's a different psychology now that it's at this bottom here. So you could see more sustained moves, but there's still uncertainty. So you want to trade accordingly to that. But it's at a decision point right now where we would want to start watching it closely because it fits our criteria for the best trading system in crypto. So we go back here and we look and see what's happening. Well, we're looking at the 4-hour time frame. And what do you know? This value is holding up a little bit. Very uncertain. Very uncertain. So the price action shows uncertain. A little bit more downside rejection. So that's showing that at least there's a little bit more buyers there. The volume is trailing off. That's not looking good. I'd like to see a point where, like here, this is a clear point right here that supply had dried up, and see what happened after supply dried up. So here, at this point, this is what I'd like to see. I want to see a supply dried up type of thing to happen. And then 1 or 2 things are going to happen. It's going to pull back like it did here. So it's going to pull back like it did here because supply dried up and the market hasn't realized it yet. Or it's going to move from that supply dry up. But what did it do here when supply did dry up? Well, and this is in my training too. I have a specific video on showing you how to see how supply dried up. Once supply dried up, it did retrace. Now, if you would have bought on that retracement because you saw that, that's some 21 to 24% move. And then you had multiple opportunities to maybe re-enter in a pullback and then get some more. So that's a prime example. That's what I'd like to see here unfold here. But right now, if you look at what's happening, this might be even a good time for a probe position because the 50% mark is holding up on a lower time frame. So you do a probe position so you can watch it, so you can kind of get a feel of how it's moving. This is how I trade anyways. I'll do a small, sometimes meaningless position at a probe position. So it's in the back of my mind. I get the emotion of how it's moving. I see how price is moving. And then when I'm ready to go size at full size, I have more confidence because I've been watching it closely to go full size if it pulls back and I see that there's supporting buyers, or if it starts to move and it starts to do a breakout, I have more confidence because I've been watching that probe position. I've been more attached to that position than just looking at the chart. That's the way I trade anyways. Atom. Let's go to Atom BTC. This is probably a bad one to look at because it's been running. So this is a bad one to look at because it's been running and it's new. So this method doesn't work good for something like this. Let's go to EOS. EOS is another example. See the trade, what is held up? This one here on EOS, I'm using the wicks. So see the wick? So the wick. So then this is the entry point. And if you would have took that entry point, you would have had multiple times because it did pull back. You'd have target 1 would be here, 14%. Target 2, 22%. Target 3, 31. Target 4, now reaching at 37%. And what you would do here is you'd already have your stop loss and profit. So you're getting close to probably your stop getting hit, but maybe you put it down below here, just barely in profit. But this is a point where I'd probably exit the trade. This is where I'm in profit, but it doesn't look like it wants to continue the strength upward. It might change in a day. Then I'll just enter again. So it's just a matter from there of just making the decision. But I'd probably exit this trade if I had a stop loss and profit, mainly because I just get more profit. MCO. So that's a really small measured move, but it fits the model, the recent model. So if we draw MCO's measured move, and we draw here, and we put a line in the middle. Now I'm doing this simple stuff. I haven't talked about moving averages or anything else, because what you're going to do is on these other time frames, the moving averages aren't on here. But here you are looking for proof between the 9 and the 5 and the 24 of what's happening with those moving averages. So here I can say right now that if I would have entered this trade, I did not enter MCO. So if I would have entered this trade at the signal that it fired here a couple weeks ago, I'd be in this trade and I'd still be in this trade. I would have took some profit, but the fact that it's above the 24 right now, and if it uses the 24 for support, as it has in the past, so see how it's kind of used the 24 for support, which is this white line here, then that would give me more confidence to stay in the trade. If the 24 price is increasing or leveling out but moving upward, that gives me more confidence, especially as the faster moving averages are doing that as well. I'm also looking at my STSI, and you see that the STSI is in a changing period. It had the one signal fire here. It's in a changing period. Now, what you generally see in a changing period is something like this. You're going to see, like, this is a changing period here, and then it changes over to the bull bias. So this is coming off a bear bias, and then signal 1 fired. What you're looking for after this to have more confidence is for maybe the same off color here, but then for 2 to fire, and then 3 to 4. And as that fires, what's going to happen is you're going to see it move from here to here. That's what's going to happen when those type of things fire, and then it goes to full bull bias. Because what did it do last time that it did that? Well, last time that it did that, here, this is kind of like where it followed a similar type of model. It moved 78%. So that was after these series of 1, 2, 3s firing. It moved 78%. Well, we have a 1, 2, 3. We would expect maybe them to fire like here. It pulls back to the 25%. And then the 78% puts it just under 1,200 Satoshis for a 68% move. So that'd be what I'd be looking for as well in something like this. Sky. And I'm just going to go through a few more of these. That's fitting the same model. I'm going to try to find something that's a different model. Okay, here we go. Strat. So Strat is, we use this here, and we'll use this here. And then we're going to take the middle. So this is real simple. On Strat, we have no decision to be made. There's no reason for us to enter a trade here. I could say you could create a trade idea that if you believe that this bottom's going to hold, you do a probe position here just to get into the bottom. So if you like to trade that way, that could be an effective way to actually trade. So you could do that. But right now, well, let's see what happened. Let me just talk about the story of the chart. 25% was rejected, which aligns very well with an open and a close, was rejected. 50% of this day's run was rejected here. When I mean 50%, should be obvious. This day had an ATR, a true range, up to here. Where did the previous day reject? It rejected 50% of this actual daily move. Not a good sign. Means that there's still sellers out there. And then here, still it wasn't, if you look at the candle by itself, you would say that's an indecisive candle, but it means nothing. It means just wait for the next day. So we're waiting for the next day. Right now there's nothing to do. It's not even worth looking at a lower time frame. The only time that you want to do something is put an alert here, like this. And you'd have to change this alert if the next day closes down, and you would go not create new order. That's exactly what I did not want to do. Create new alert. Add alert. So you would add alert where you want to be alerted when it's going to move into that area where you need to start paying attention. Now, the other thing that you could do on this chart is that you would then go to the wicks, and you would then take, and actually I should have, yeah, here, these wicks. And then you would look at this and say, well, it still doesn't, there's still not a reason to trade this. Because even using the wicks, we see that the rejection was at the 25%. Of course, this rejection is still in the same place. And this right now, it looks like it's going to probably test this bottom here. And if not, go below it. Right now, there's really nothing to do. You'd put your alert right here. So add alert. And then if it got there, then you'd be alerted. And then you start paying attention. And then you look at lower time frames and say, okay, the lower time frames, you look at the weekly open close. You look at the daily open close, you look at your moving averages, you look at your dynamic price channels, you pull up and you look and see what is the STSI doing. You see the signal 1 fired, which is an early signal for the STSI, fired here. So that's telling you that there's some underlying strength possibly being changed in the market. So that's something to keep in mind, is that, okay, signal 1 fired. So this would probably be on your radar. So it would be something that I have another watch list that I've just cleaned, but I call it crypto top. I would probably go Alt W, and I would add this to my crypto top watch list. So these are the things that, while they're not ready yet for a trade, on the best crypto trading strategy I use, the weekly analysis one, this would be something that I want on my kind of tighter watch list. So I don't have to go through all the other lists of the other ones. This one is something that I might even want to look at before the alert actually hits. So that's how I go through this. That's the process that I go through. Like I said, I could go through more charts, but I think you get it. Hopefully you get it. I'll end with this. It's real simple. What I've done here, I've given you a high level overview of how to trade this. The details around how to trade some of this it's like anything else. It's in the details. That's what my training's for. My training covers measured moves, how to bring measured moves into your trading in a highly effective way. It covers impulse moves. So how to look at impulse moves and how to really trust impulse moves. It covers value channels in detail so that you know how to properly draw value channels and trade around them. My training also includes entries and how to enter around value channels, covers stop losses. It basically gives you the foundation to create your own trading system in the markets. And so when I talk a lot about confirming price action, stopping volume, other things, that's all explained in my training. When you have all that knowledge, then you can apply something very simple like this quickly, and you can go through chart after chart really quickly and identify what should be on your radar for that week. But then when it's on your radar and you're going and looking in detail like we would maybe be here, you're using a different methodology of price action, of reading moving averages, reading all the stuff that I teach in my training to then do your entry, manage your trade, take your exits and everything else. This includes targets, stop losses, and everything else. So that's the full picture on how this works. And once again, to join my training, it's real simple. It's been the same cost in the beginning. I've always charged 0.07 BTC, and that includes, I update it weekly. In addition to, I'm available in Discord. You get a private channels in Discord, and I'm also adding Forex. So I've been trading Forex for years, and I'm adding the Forex training here, and I'm in the midst of finishing that off here as I do this video. So definitely join the training. You join the Discord as well. That's free to join. So you'll find a link to the Discord group down below. So you'll definitely want to join that, and subscribe here on YouTube. I look forward to seeing you in the next video.